Welcome to the Hog Market Talk Podcast, your weekly deep dive into hog market fundamentals, breaking news, and industry insights. Trading commodity futures and options involves substantial risk of loss and is not suitable for all investors.
All right, I've got Luke Wells with us here today. How's it going, Luke?
Good afternoon, Mike. It's going well, man.
Good deal. Well, we're going to talk about a few things today. I'm going to start off. We're just going to go through some of the Iran conflict, talk about oil and corn and wheat and some of the moves there in the input side of things. And then you're going to wrap up kind of talking about the hog market, talk about cash a little bit, managed money, some things along those lines.
Sounds awesome.
All right, so let's start off with the Iran conflict. We've had a few news headlines kind of come up lately. Oil prices really surged today. We'll have that slide up that you can see from Cade there. But prices surged here after media reported that Trump rejected the Iranian proposal about the Strait of Hormuz. Brent WTI up about 7% here today. A few things have been going on. It seems like that market's accelerated a little bit again. Ceasefire that was in or is in place seems unlikely to continue. It seems like war is likely to be back on, and I think the funds have been piling money into the crude oil market specifically here, kind of backing that up. So oil prices have leaped here. Really interesting trade lately, I think, because the S&P 500 also had an amazing recovery, 20th fastest recovery ever for S&P in the 4-week time frame we had. If you look back, we were down about 5% in the month of March, up about 9% in the month of April. So really big turnaround. I think it caught a lot of traders off guard in the S&P turnaround here. For us, this war's not over with yet, and the S&P was back up to record levels. So I think that caught a lot of folks off guard, especially with crude oil now advancing higher again. Now, the one thing to watch out for would be the U.S. dollar. If the war does come back on full swing, the U.S. dollar likely accelerates. So keep an eye on that, especially in the commodity world, makes exports a little bit less competitive, Luke. But it would be a little bit bullish on crude oil still from these levels. And along with that, too, you're looking at the grain markets, corn and soybeans and wheat specifically, that would be beneficial from that. So the soybean oil was up pretty good again today. Soybeans popped with it along right up November, almost within a penny of contract highs again on that market. I'll have Cade pull up the December corn chart there. Made new highs on the move, $4.99, but we didn't quite clips $5 yet. So still haven't traded $5 since the end of 23 on December corn here. Something to keep an eye on as we're bumping right up against that right now, Luke. It's really been something to watch. So in turn, after this announcement, Iran, they're keeping the Strait of Hormuz closed to any other oil tankers hoping to carry crude to customers worldwide. So the blockade continues. In the time being, this is likely probably not over with quite yet. The U.S. stock market, they did lose just a little bit of ground today, but not too much. We had the afternoon announcement from the Federal Reserve here today as well, Lucas. What we saw there was no change, which was basically dang near 100% guaranteed that we weren't going to see a change out of the Federal Reserve. This was Powell's last remarks as Fed chairman, so we're now to the new guy next month. He is going to stay on as Fed governor. It seemed like that was the biggest headlines I've seen in the last half hour when I was watching him talk. So him staying on board basically until the investigation into the Fed is over with from the DOJ. So that's pretty much all the news I got for you when it comes to Federal Reserve and what they've done here today with the announcement. A lot of earnings as well this afternoon for the Meg 7, for the 7 coming out as well. So a big week for the tech stocks. Outside money flow is a booming. Crude oil has been moving hard, up $6-7 most of the day today. And then the input sides, corn, wheat, really been running hard lately, Luke. So a lot of activity in those outside markets surrounding the hogs right now.
Yeah, 100%. And it appears that this thing is going to have a longer tail, right? So protecting your inputs as a protein producer has been and continues to be important, I think, as we sort through this, what appears to be a longer term issue, right? And I mean, above that too, I mean, fuel prices popped, and have been rising, really popped day over day, right? At the pump, I mean, right? And University of Michigan came out with their consumer confidence study, right? Lowest consumer confidence rating ever, as long as they've been doing that.
It wasn't good.
Yeah. I mean, so just all that kind of matters. And anything energy related. I mean, yeah, you mentioned crude and oil, and you mentioned biofuels, soy oil, like that looks like those things have they have a trajectory.
Impact on agriculture. I mean, sure, gas is up $1 a gallon from last year's levels, but diesel, man, almost $2 higher from last year. That, when I'm talking about trucking grain somewhere, or you're taking a load of hogs, that cuts into stuff.
Yeah, absolutely.
So
absolutely,
yeah, keep an eye on that. Inflation, anyways, that makes up about half of the inflation complex would be just fuel prices alone.
Yes. So we talk about some pigs.
Let's talk about some pigs. What can you tell me? We finally got up to some resistance levels again today. Having a little trouble breaking through some of these levels, aren't we, Luke?
Yeah, I mean, it's the hog market. It's kind of continued to be rinse and repeat, right? I mean, the hog market's carried some nice forward premiums. It wants to move higher, right? But we're in that time of year where we're still, closer to 2.5, 2.45, 2.5 kill than a 2.4 kill, right? Weekly harvest. I'm sorry. Quite frankly, we've seen some volatility and some downward movement, and it's just because we're still kind of in a flatter structure, and nothing's broken, nothing's wrong. I mean, the hog complex is still isn't in a good spot. But I'd like to start with the managed money chart. I think that's just a good way to kind of talk through this. So, if Kate can bring that up, this would be through last Thursday's commitment of traders, shelled another 23,000 contracts in the lean hogs. It puts us down to about 66,000 long versus record of 146 versus record short of -30. Go ahead, Mike.
Decreased, though. I mean, if you don't pay attention to that every other week, that's come down a little bit.
It's came down a lot as we've taken money out of the front end of the lean hog curve for various reasons. But this honestly, so you can look at this a couple different ways. Like we need to drop, and it's probably mid-May to later May, to some lower seasonally adjusted production runs, more 2.4s than 2.47s, right? We need cutout to go. I mean, like, the landscape's all laid, beef price is high, pork's competitive, pork's getting lots of features, all that's there, right? So, but if we go another 2 weeks down the road and cutout's still stuck at 98, there'll be more to shed, right?
Yeah.
Now, the other side of that equation is, there's a lot of dry powder to buy if we get this run, and like we're still in a spring hog market. We're not in a summer hog market yet, and it's kind of like sucking water through a garden hose. You got to siphon it, get it going. It's slow, and once you turn that corner and we get down to 2.4 or so or lower type, then water flows, right? And so I guess my point with this is, this is not an uncommon managed money position. You look at Q1 of every year, the index is moving up off our winter lows. Futures a lot of times will make contract highs. Everybody gets excited, right? But then you hit this March, April timeframe when the market's just flat, right? Cash is flat, cutouts flat. And then, the managed money, they get a little tired of that, right? And they trim some positions just like they've done here. And you go back a year ago, you can see we caught our summer rally and they bought back in, right?
Yeah.
I mean, so this is noteworthy, right? And it needs to be watched, but it's kind of, I think we've been saying the hog market this spring has really been kind of following the textbook, right?
So where's the light at the end of the tunnel? You mentioned the amount of hogs that we still have available today. When is that going to start getting slim enough that the packers can start to pad their margins a little bit more?
Well, I don't know if it. I mean, this isn't the time of year when packers are going to pad their margins because they're coming into tighter supply.
Well, they're trying to. Are they pulling ahead here or not?
No, I think
so?
we're about balanced. I mean, I think it's the time of year when producer margins should go up, right?
Yeah.
Lowest margin, but from that perspective, I mean, we've had plenty of production around. I'm not saying it's problematic.
Yeah.
Been putting and pigs are big. Corn, even though corn's rallied, it's still relatively low cost. Like lots of pork on the market, right? And so we've just been in this flat realm. Cash this week, and futures are up today, and it could have been some cattle hog spreads unwind. Also, cash like 96 traded today. That's $1 higher than 95 that did a week ago and traded yesterday. Index is 91. I mean, so that's all good stuff. Right. So that could have helped because the hog market keeps wanting to go higher, but we get through the week and then cutout ends the week stuck at 98.
Yeah.
And then we sell back down to 101 on the June or 101.50 or whatever. Right. And so right now, actually, today, where the board closed with today's rally, basis is a little worse than normal. It's been about right on the 5-year trend. So futures got a little optimistic.
Versus the June.
Yeah, versus the June.
Yeah.
Just on a 5-year, meaning the premium from index today to June futures has been pretty normal.
Gotcha.
It's not been elevated. It's not been discounted. It's been pretty normal, right? So the market's playing it kind of straight up. Then you go to the July and the August, it's a few bucks higher, right? It's just we want to continue to have this optimism. And again, we are too. We're optimistic on it. I've had kind of a trend change and we've had good weight. I mean, I'd say like the last 5 weeks, customers like, yeah, plenty of good growth in my pigs. They're growing well, good weight, right? You know, like in the last 5 days, last 7 days, like, yeah, I'm getting into my next round of barns and they're a little lighter. Just the weight's not there. They need a few more days. That's very normal as you come into this, as it gets warmer, as some of the more health challenges come through, right? So, you know, just the hog market, honestly, just we're still optimistic. We have the best demand structure we've ever had as an industry in front of us. Quite frankly, we just need to drop down to 2.4. We need summer kills, not spring kills, right? And we think they're coming. But just be a little bit patient there. Again, still very optimistic. Not so optimistic to June. I think June's got plenty of premium in it for today, right? But I'm talking more July on out. The market's got a lot of good things in it, and just the other thing for perspective, right? It's all relative, but we still have really good forward margins ahead of us. And, quite frankly, when you look into April of next year and June of next summer, I mean, they're not quite at today's price. They're not far off it, right? I mean, the hog industry is in a good spot. Demand's good. Supply is manageable. We just, to oversimplify and wrap this thing up, I think we get into a few less pigs, which are coming. I think the cutout will respond, and that'll drive this thing again.
All right. Well, thanks for your time, Luke.
Take care, man.
Thank you for tuning in today. Please click on the link in the description to find our daily market commentary, along with many other marketing items that you may find interesting. Please go to our website at professionalagmarketing.com.